major trend in India is that it is likely to be a beneficiary of today's China versus the West tension. China has been the manufacturing factory for much of the world for the better part of the past 3 decades. As the Western world look to prepare for contingencies in event of conflicts between the West and China, a few things are happening. 1. Companies are diversifying their manufacturing locations out of China. This is to minimize supply chain restrictions should there be access barrier. 2. In critical products such as medicine, electronic chips, solar panels, defense equipment, countries are looking for non-Chinese manufacturing partners. The willingness to approve technology transfer to Indian entities and the intent to buy in volume helps this industry build up expertise and skill. Thirdly, for intermediate products such as specialty chemicals and industrial components, carbon reduction targets in China and Europe partly helps to shift the production to India. Lastly, the availability of engineers and pharma research headcount in India also helps to shift some of these activities to India.
For Malaysia, over the next 5 to 10 years, several major trends are expected to impact the Malaysian economy significantly. A strong focus on sustainability will drive investments in green technologies and renewable energy to support Malaysia's carbon neutral goals. Digital transformation and technology adoption will enhance productivity across industries, while efforts to build global supply chain resilience may establish Malaysia as a strategic manufacturing hub. An aging population will increase demand for healthcare services, and there will be a heightened focus on upscaling the workforce to meet the needs of a rapidly changing job market. Additionally, geopolitical dynamics may influence trade and investment, while urbanization will require infrastructure development. For Indonesia, over the next few years, investments in the mineral downstreaming are likely to fully bear fruit and drive GDP growth and exports towards a sustained and stable currency. The effectiveness of a Prabowo administration in driving sustained growth, as well as improving the bedrock low-end segment of the economy, is a key driver for the medium and long-term growth of the economy. Thailand has an aging population that will impact economic productivity and consumption growth in the medium to longer term. This is a population issue that is common among many countries, especially developed nations. The Thai government needs to address this and introduce policies to reverse the fertility rate. The Thai government also needs to tackle deficiencies in their public education system to furnish their students with the applicable skills and knowledge to meet the fast-changing demands of the global economy.
The key takeaway for an India investment position is that there are multiple developments within India that can enable the India equity story to be one of the structural stories of the coming decade. To put things in perspective, India has given 14% compounded returns over the last 20 years, when China was emerging as a manufacturing powerhouse and India was nowhere in sight. We see enough catalysts for India to still repeat that in the next 20.
The key takeaway for investors looking to invest in Malaysia is to appreciate the combination of government stability, growth potential, and resilience. Malaysia has finally seen some semblance of political stability, which provides a platform for the government to implement policies to grow the economy. The government is working to create a better business environment and attract foreign investments, while focusing on digital transformation and sustainability. They are also investing in infrastructure and manufacturing, which opens up many opportunities in these areas. Amidst the global volatility and trade tensions, Malaysia can provide a safer haven for investing and is one of the beneficiaries of the global supply chain relocation. As for Indonesia, the previous 10 years of Jokowi's administration has been marked by fiscal prudence as well as infrastructure development. Over the next 5 to 10 years, a pro-growth Prabowo administration can take advantage of the infrastructure foundations laid by Jokowi to develop a pro-growth strategy to accelerate Indonesia's path towards a middle-income economy. Indonesia's foreign policy is likely to be more strategic, with the foreign and military experience of Prabowo enabling Indonesia to be more independent and relevant in the multipolar world. This can enable foreign investors to recognize the stability of Indonesia as an investment destination. For Thailand, if the current coalition government can remain in office for its full term, Thailand's economy should continue to recover in the near term, given the expansionary bias of the government's policies. This could potentially spur corporate earnings growth, which should be supportive of the market's performance. In the medium to longer term, policies that address longer-term issues for the Thai economy that were highlighted earlier need to be followed through regardless of the governing party, because they affect the longer-term prospects for the Thai economy. Thank you for watching.